Hey, what is up, everyone? Welcome back. It is Monday, and we took a little break last week. We're back at it here with these updates and seeing what's going on. There's a few, housekeeping things to cover today. One is OPEX week contract rollover. We have the new contract which is coming into play. So the current contract, the H on the futures market for equities, is going to be going away forever this Friday, where we have the quad, which the OPEX, call it what you will. But we have multiple expirations on futures and options coming out at the end of the week, which could add to the volatility and the chop throughout the week. Not because there still isn't any news that surrounds trade wars, tariffs, and other aspects that are expected, but this is going to add to some of that. So I'm going to be switching the contracts. I do believe that the current H contract is still a bit heavier on the volume side. Traders would want to change it based on the volume. Now, by the end of the day, I can almost say with certainty that we're going to see the current H contract have less volume than the M contract. So the M contract is the one that traders would want to flip to when we're talking about the futures, especially the equity markets here for the June contract. So I'm currently on the June contract. Whatever I quote and say for the remainder of the week is going to be based on the June contract. The figures are going to be different, so the numbers are going to be a bit higher than what you see. And when you look at charts or you look at TradingView, no, it's not a massive gap that you're seeing. It's just a contract rollover, which most likely is probably going to take into effect tomorrow on platforms like TradingView, because right now, if I just type in NQ one exclamation mark, what I see is the current contract that is the H. But I'm just going to go right into it, dive into it. This is the M contract. So what do we have throughout the week here? We can take a look at what we saw last week. We had a decently green close on Friday, right? But that was pretty much the only good close that we saw all of last week. The Bears are still in the driver's seat. They still won last week. Concerns of U.S. consumer and the potential recession were front and center. You have a lot of tariff talk. You have tariff risks, trade wars, a lot of geopolitical risks as well that are still plaguing the current markets that are just sitting on every rally that comes to be. So Monday, Wall Street and Main Street slide to the start of the week after Trump's tariffs came into play, or back into play, I should say. Delta Airlines added to consumer health fears by slashing its outlook, with risk assets like Bitcoin breaking down further. Redfin was rescued by Rocket Company's buyout, and another space stock slipped. On Tuesday, we saw the S&P joined the Nasdaq in correction territory. Bears broadened their attack as small business optimism plunged, and retail sector ETF XRT made a 52-week low. Airlines regained altitude despite industry warnings, while Chinese electric vehicle stocks surged on improving demand. On Wednesday, better than expected inflation readings helped the bulls close the market green. Intel appointed a new CEO, and retail stocks like Groupon and Rumble and iRobot popped back on the radar. Thursday, we saw that stocks did slip despite positive inflation readings, just like on Wednesday with CPI. February's producer price index fell month over month for the first time since July. Dollar General finally delivered some good news about its turnaround plan, but still warned of a weaker consumer. And on Friday, Trump not mentioning tariffs helped the broader market rebound at the end of the week on a high note. We see that not all the time, but it's a very consistent type of scenario where Friday it seems like markets are just allowed to rally. They're like, you know what, let's not suffocate this thing by adding more nasty headlines to the mix. Let's just kind of let things settle down. And right, Fridays we green, but what happens with the follow through? Now that's a completely different question, where on Sunday we see some downside momentum. Right now, surprisingly enough, it's been picked up decently well back into Friday's highs. But all in all, we haven't necessarily seen any kind of real expansion to the upside swing. And on Mondays, what we see is that stocks realistically end up kind of taking a beat down when more tariff information comes through. So, excuse me, it's going to be a very interesting week, because we have the Fed that comes out on Wednesday, 98% chance that they expect to keep rates on hold right? It seems like Jerome Powell hasn't fully yet been pressured to start cutting rates despite this current market weakness and perceived continuous unwind in equity holdings. We have NVIDIA's annual GTC conference, which is becoming known as the Woodstock of AI. The event is set to make headlines this week, with CEO Jensen Huang delivering the keynote address tomorrow. As for NVIDIA stock, it's down about 30% from its all-time highs of about 150, hit only several weeks ago. So we'll see how things shape up, but right now, NVIDIA did have a decent end to the week last week. It didn't have a terrible week, honestly. It's been trying to climb higher, but we do need to see the broader tech market kind of mellow out and start this pump higher amidst all of this backwards tariff talks and tariff news, realistically. So it's been pretty difficult tracking all of the latest tariffs, honestly. It's hard to get a nice fresh timeline of what's going on and where trade policy is currently standing, but somewhat of the clear direction is now being dictated by the Trump administration. It's a twofold goal. Secretary of State Marco Rubio declared on CBS's Face the Nation, stating that the recent actions are not aimed specifically at Canada and Mexico or the EU, but at everybody. Everyone gets hit. So there are crucial industries like aluminum, steel, aluminium for our UK friends, semiconductors, and automobile manufacturing that President Trump rightfully believes that the US needs to have domestic capability. And the way that you protect those industries and build that capability is by ensuring there are economic incentives to produce in the US, and we have to deindustrialize the United States of America. So there are things that we can no longer make to be safe as a country and in order to have jobs. And that's why we had the Rust Belt and suffered the loss of all these important jobs that once sustained the entire communities. Wiped out by trade and basically sent these factories, jobs, and industrial capabilities to other places. That cannot and will not continue, and this is going to happen now. So President Trump rightfully believes that the balance of the global trade is completely off kilter. For 34 or 40 years, we have allowed countries to treat us unfairly in global trade, much of it during the Cold War because we wanted them to be rich and prosperous because they were our allies. But now that has changed. I understand why these countries don't like it. The status quo of trade benefits them. They like the status quo, and we don't like the status quo. We are going to put tariffs on countries reciprocal to what they put on us, and then from that new baseline of fairness, the reciprocity, we will engage potentially in bilateral negotiations with countries around the world on new trade agreements that make sense for both sides. So obviously, right, this is a huge concern currently, and we've seen that in the first stint that Trump had, right? We had a back and forth mainly with China that time around, but right now it seems like it's targeting everyone, so there's more of a global rift that's shaping up. So we'll see how that does shape up, but it's global stability in terms of the topic of trade and trade war and tariffs that needs to take place if this market has a chance of even rallying, even whether it's for a dead cat bounce realistically. Now, as we look at things, like I said before at the beginning of this, we're on the M contract, so this is the new contract. It's the June contract, so I've just rolled it over. We probably still have more volume on the H contract, right? What you can do on Sierra is have a nifty little quote board that can give you those insights. So if I just type in ES5, see, I don't even know what I'm doing. Took me forever to do that. So if I just compare the two and I look at what the volume looks like, generally I have volume-based rollovers on these guys. You can see that the volume on the M, which is the June contract, is 195,000. The volume on the H, which is the current contract, is 260,000. So it still obviously outweighs it by a decent chunk. But by the end of the day, those things will flip. And it might be a bit choppier because they're kind of just sharing volume realistically. So you got to keep that in mind going forth. So whatever, I'll just close this. Oh my God. So my point being is that, yeah, we've had a decent Friday rally that kind of held prices up. We failed currently what is at the 5,700, 5,705 auction top on the S&P 500 on the M contract. We failed that area several times last week. It's the equivalent on the H at 56.40 to 45. That's the same area. So we'll see how these guys do want to hold that out, right? Obviously, if I'm looking for the continuation to the upside, right? Not that I'm just like diehard bull on this, but if I am looking at the continuation to the upside, realistically, what I'll be expecting is some kind of a expansion to a rally into the upside swing above this area to hold things out, right? That's going to be the base case. We either start bidding from this 5,700 and above, right? We get this larger expansion, or we see prices back into 56, 40, 45, which is going to be the next territory where I would want to see maybe some of that buy side try to hold things out, right? Still, things are very fragile here. It's more so, can we get the expansion this week or starting today at least before the Fed? You know, the Fed can really, really shake things up so we can see that bullish note continue. So we'll see how these things shape up. We'll break this down in the coming sessions, and I hope everyone has a fantastic trading day. Let's see if this bull can continue the momentum to the upside. Jack, I'm not going to be streaming the Open today. We might do that later, but we'll be jumping on our Zoom today. So let's open up our stream here at TradePro Academy, and I'll see you guys on the other side. You can check out community.tradepro academy where we have our open Discord, and there's a lot of information